buy silver miners and explorers and developers. And if I've got a 10 bagger and silver's just gone vertical, you don't know what's going to happen next.
Yeah.
It is not a crime. It is not evil. It is not a silver hater thing to do to realize some gains. That's okay. And just think about it. Like the wealthy people we know in this business, none of them are hodlers who say, no, I'm not selling an ounce until it reaches $5,000 silver, I'm talking, right? Yeah. That's not how you make and keep money. Mr. Market is not one guy. And even I don't have him on my speed dial. I can't just call him and say, what do you think? Mr. Market is millions of people making decisions for all their own investment goals and purposes. And even if you consider the whales, they don't always have the same goals. And, for every buyer, there's a seller. There's a different interest there. So by way of caveat, I mean, let's just set it out front. There's never going to be one clear, simple explanation. It very rarely is, even when there's an obvious driver on major headlines clearly correlated with price movements. Yeah. We're not going to really know with much clarity until we have hindsight later on down the road, which doesn't help us with our decisions today. So there's a lot we can dig into here, but let me just say right off the top, I don't think this is a blow off top. I don't think the volatility that we've seen is especially concerning whenever anything goes vertical, right? There's often wiggles along the way. Some measure of correction, people like to say, is healthy, right? Yeah. It shakes out the weak hands. That's why it's healthy. So I'm not alarmed. That having been said, I am Darth Silver, right? Let me put it this way, Jeremy. People like to say, oh, well, we're, compared to the last all-time high, you adjust it for inflation, we're nowhere near a real all-time high. And I get that. And I get that that's in triple digits. I get that that's over $200 an ounce. But to decide if something is cheap or dear, you don't look at the previous peak. I mean, really, do you want to go by the peak? What happens after peak? It goes back down. So you need to start from the base. And the base for this cycle is late 2015. Just over 10 years ago. And from that base, silver has now more than caught up with gold on a percentage gain basis. You can call me Darth Silver and call me names and so on, but every diehard silver bull you ever talk to will tell you that silver lags gold at first and then more than catches up in the end. So I'm not concerned about the market action too much right now in terms of the volatility and noise and all that stuff from your intro. But I do think that it is prudent to look at silver, if it's in the more than catching up with gold phase, that is something to take seriously. And by the way, if it is, it could actually signal it's going much higher. I'm not calling a top here. But if that's the blow off top coming, then that does imply, a downturn, a substantial downturn afterwards, if not a bear market. So where do you want to go from there?
Despite recent volatility, there's little evidence that silver has reached a definitive peak. Comparing today's prices to past highs can be misleading. What matters more is where the current cycle began. For silver, that base formed nearly a decade ago. From that low point, silver has now matched, and in some cases exceeded, gold's percentage gains. Historically, silver tends to lag early in precious metal bull markets, then accelerate later. That pattern alone doesn't signal danger. In fact, it often suggests the market is transitioning into a more advanced phase. Whether this leads to further upside or a period of consolidation, the current action fits well within historical precedent rather than defying it.
You're talking miners, and which is my wheelhouse. So yeah. I have two ways of looking at this. One is, okay, let's say we go into a period of correction and consolidation. I would actually consider that a much better outcome than a blow-off top. I mean, if we have a blow-off top in the next few weeks, great. Well, I'll make a bunch of money, but then the party's over. I don't want the party to be over. And as a fundamentalist, Mr. Market doesn't care what I want, but as a fundamentalist, the debasement trade is far from over. I just don't see why this bull run for gold and silver should be over. Right. So a period of consolidation and correction before going to the next leg higher, I think, is A, more likely, and B, more a preferable outcome.
Yeah.
But if we do get the blowout top, right, we get a bunch of money. And here's the thing though, if it's disappointing and we don't get either and we get into a correction mode, let's say silver drops, 30% from here, right? We're back down to 50.
Yeah. Yeah.
That is a fantastic price for the actual business of mining the stuff, of getting it out of the ground. So here's how, the way I interpret that is, the miners are literally printing cash, or almost literally. If silver is real money, as is gold, they are making money pulling it out of the ground. And the margins for mines that are designed, the crappier ones are designed around $20 silver, and the better ones $15 silver. So they are making money hand over fist. And by the way, litmus test there, if you're a silver investor in the stocks and your silver company isn't making money now, there's something wrong with that company. That is not okay to have, such nominal record high prices and not be able to make money. So
Yeah.
what I'm saying is, if the worst case scenario, or worst likely case scenario, is that we get a substantial correction, the actual business of mining silver will be intact. And the buying opportunities, that type of correction, the non-diamond hands that freak out and dump, will create, spectacular buying opportunities, which would be great news for anybody that missed the rally. But Jeremy, if that was Mr. Slammy, like coming to while the volumes were thin and people are on holiday, nobody's paying attention. Now is my chance, Mr. Slammy, with his snidely whiplash mustache, right, and his black cape. I'm going to slam the market down. If that's what happened, he failed spectacularly. I mean, what's happening today, and what has actually happened all year long, I posted a meme earlier with a gravestone that said, Mr. Slammy, RIP 2025. It just seems like every time there's a market event that, those inclined to see a man behind the curtain in some of these actions would say, oh, there he is, there's Mr. Slammy. Every one of those gets bought.
Yeah.
And for that not to be the case this time, we would have to actually have seen the top. Yeah. And as a fundamentalist, I see no reason to make that call.
A sharp speculative blow-off would end a bull market quickly. A correction or consolidation, by contrast, can extend it. From a fundamental perspective, the forces driving precious metals, currency debasement, rising costs, and long-term supply constraints remain firmly in place. Even a significant pullback would leave silver prices well above the levels needed for profitable production. Many mines are engineered to operate at far lower prices than today's. That means the core business remains healthy even if markets cool temporarily. Corrections often shake out short-term traders, but they also create opportunities for disciplined investors who missed earlier stages of the move and are waiting patiently.
Okay, well, let me address the latter part first. I mean, exchanges have rules, and what they did was not something they invented out of whole cloth overnight. They have rules for extreme volatility, and even the broader indices, right? If the S&P goes up more than 7%, I think is the current circuit breaker, or down, right? The major exchanges have rules for extreme volatility. So I'm not saying it's okay and that I don't mind when something, pulls the rug out of a rally that I'm long on. But I'm just saying it's not true that they suddenly, snidely whiplash showed up and yanked the rug out of everybody with no precedent. And we have seen it before, and it's not just silver, it happens to other things. So it's a mistake to just look at what happened to silver and say, oh my God, obviously this is manipulation. Well, if copper got smacked down at the same time and platinum and palladium got smacked down even more than silver, then you really can't logically say that this was about silver. So on one paw, I am a wolf after all. And you could make a case that nothing untoward has happened. This was within the bounds of existing rules. Yeah. On the other paw, the timing sure is suspicious. I can absolutely understand why anybody who remembers the Hunt brothers, and I do, by the way, I don't dye my hair. It's just genetics. You can see that I have reason to remember the Hunt brothers. Of course it looks suspicious for a rule change to happen just when everybody is getting, excited about the trade. I get that. But what do we do with this, Jeremy? If it wasn't, there's nothing we can do about it. And for people who say, oh, well, it's manipulated, I'm taking my marbles and going home, I understand the emotion. But if you do that, you're out of the market. You have your opportunity cost for missing out on what could be the next big leg up is substantial. So I'm not one of these persons who says there's no such thing as manipulation. What I say is, there's always manipulation. And I'm not going to let that prevent me from participating in the market and speculating when I see trends going in my favor.
Market interventions and volatility controls are not unique to silver. Exchanges across asset classes use circuit breakers and margin rules during periods of extreme price movement. When multiple commodities move sharply at the same time, copper, platinum, palladium, it becomes difficult to argue that one specific metal is being singled out. Suspicious timing fuels speculation, especially for those who remember past market episodes. But suspicion alone doesn't change outcomes. Markets have always included forms of manipulation, regulation, and intervention. The key question isn't whether these forces exist, but whether they invalidate the broader trend. Historically, they haven't. Bull markets climb despite them, not because they disappear.
I think that is not a new normal. That's normal. That happens whenever there's a bull market. I mean, just look at the hype we've seen in meme stocks or pot stocks or cryptos or, or recently the AI hype. All you had to do for very large companies, all you had to do was say, oh, we have an AI, implementation plan, and your stock could go up 100% or something for large companies. So, this is normal. Actually, let me address directly, Mr. Audience, I'm looking at you. If you're one of these people who think silver is going to 4 digits, and anybody who says otherwise is obviously an agent of evil, and you can't sell ever anything, let me address this. Like, think about Warren Buffett's or your mainstream investors, or think about your Doug Casey's or your Rick Rules closer to home. All of those people take profits. It doesn't mean they lack conviction. It doesn't mean they're in league with the devil. It doesn't mean they hate everything good in the world or your favorite mineral, metal, or commodity. It just means that's how you make money. And on the silver, I just heard David Morgan, who is perhaps the most beloved silver guru. I may be Darth Silver. He's the opposite. He's the silver guru everybody loves. And he was saying, look, you don't want to buy silver at 50, see it go to 150, and then have it ride it all the way back down to 50. There is nothing wrong with taking profits, and you should. Like, okay, say it goes to 150, you take some profits, and then it goes to 200, right? That inflation adjusted all-time high. So you lost some opportunity. So what? You've got money in your hands, realized gains. No gain is real until you take some profits and realize it. And one more thing, when we talk about all this trading, we're mostly talking about the stocks, not the metal itself. I don't think I've ever sold an ounce of silver since my financial meltdown in 1999. And by the way, and that's what silver and gold are for, right? In case of emergency, if you have a rainy day fund and it saves your family. I literally fed my family when I had a financial meltdown with my rainy day fund. That's what it's for. But since then, I've given silver to friends, family, children, whatever, but I don't think I've sold an ounce. That's not what I'm talking about. I'm a speculator. I buy silver miners and explorers and developers. And if I've got a 10-bagger and silver's just gone vertical, you don't know what's going to happen next.
Yeah.
It is not a crime. It is not evil. It is not a silver hater thing to do to realize some gains. That's okay. And just think about it. Like the wealthy people we know in this business, none of them are hodlers who say, no, I'm not selling an ounce until it reaches $5,000 silver, I'm talking, right? Yeah. That's not how you make and keep money. Keeping the money you make is as important as making it.
If metal prices retreat, mining businesses don't automatically suffer. At current levels, many producers generate substantial cash flow even after accounting for higher labor and energy costs. Companies unable to produce profits in this environment raise serious red flags. The more important story, however, is discipline. Unlike previous cycles, miners today appear more focused on cost control, operational efficiency, and balance sheet strength. Past mistakes, overpaying for assets or chasing marginal projects, are being avoided. As a result, margins are expanding. This quarter alone is likely to deliver some of the strongest earnings in years. That consistency is exactly what long-term capital has been waiting to see.
Right. Well, the industry veterans know that anything that goes vertical, doesn't take that long. So what the price action is telling us is that the big money, it may or may not be the smart money, but the big money doesn't think this is sustainable and that there will be a pullback. Now, as we were talking about earlier, that doesn't necessarily mean that the miners will turn unprofitable or something. But why would you buy if you think the most likely thing in the near term is a sharp correction? Like, even if you want more, you want to own more, you want to expand your position in the space, you would wait for that correction. You wouldn't want to buy while they're going vertical. So there's non-conspiratorial reasons just based on market mechanics for this sort of thing. And then there's also just sort of history for the miners themselves. In 2011, when we saw gold and silver, 2010, 2011, we saw gold and silver surge. The big miners really flubbed it, Jeremy. Mentioning Rick Rule, I'm sure you've heard him say that it takes real talent to turn a 7-fold increase in the underlying commodity into increased negative free cash flow, which is what they did. And I've charted it. I know that it's true. So that's the recency bias. That's the last big move we saw. And again, whether it's the smart money or not, it's the big money, and they look to what happened last time, and the miners flubbed it. So it's kind of a show me, don't tell me. And the good news here, this is, I think, very good news, is that the miners are showing much more discipline this time. I'm not saying they're all perfect, but heads did roll, and the CEOs now know that. And we're not just seeing, willy-nilly buying of millions of ounces here and there in countries where you can never build a mine or something like that. There is a lot more discipline. And we are seeing margin expansion. I plotted that too. It's actually happening. And every quarter that we see this, like the current quarter, like we've got, a couple of days left? Like, there is no way this quarter does not result in, a record bumper crop of probably record earnings, margins expansion, bottom line. And I'm not saying every company will do well, but the industry should deliver.
Yeah.
And that looks very well, because at that point, this becomes almost more Buffett friendly. You've got companies printing cash, and they have a huge moat. Like, even if you make a new discovery, which is hard to do, but even if you do, it takes years to permit it, more years to build a mine. So a price surge like we've seen, and not just silver and gold, by the way, but the platinum group metals, copper's doing great. The metal surge that we've seen, sure, will high prices cure high prices eventually, but it takes years. There's an actual physical moat, not full of water and sharks and crocodiles, but a physical moat to new entrants into this space, which gives the existing players chances to make money. So I'm very keen on the miners. I'm very keen on having a portfolio of the best. But I must say, Jeremy, to be perfectly honest, if I didn't own any, would I rush out and buy them today with silver, between 75, 80 bucks? Honestly, I wouldn't. I would probably wait for the next fluctuation. We just saw a fluctuation. In fact, the first thing that I did when I saw silver and gold puking as soon as the US opened in the morning, I went to my shopping list and I started looking at the stocks. Okay, are any of these going to hit my targets? None did, but maybe I'll be more lucky next time. But
maybe this week. I mean, some of them are on the upswing today with the stabilization.
But then I'm long, Jeremy. I can say that it's easy for me to be patient because I already have a portfolio full of gold and silver. I'm positioned to benefit, like, no matter what happens. But it's just really difficult for me to tell somebody, okay, well, compared to gold and silver, the gold and silver stocks are cheap. That's true. But that's not how most investors look at it. That's not how market determines price. Ramped up earnings will. Margin expansion does matter, even to the new money. So there's no hurry. This will take quarters to play out. And as Doug Casey, my mentor, always said, you can make volatility your friend. No, I think all of those can help, but really operational discipline. And I'm not going to name names, but I think everybody can think of, if I give you one choice, you probably agree with me on the one choice. Like, which of the major gold miners is known for operational excellence? It's not the biggest. It's not necessarily the.
You got to name it.
I think operational excellence is really what Mr. Market wants to see. And share buybacks, in a way, that's a red flag. You can't think of anything better to do with this money in a raging bull market. You can't think of anything better to do with this money. There's no acquisition that's accretive. There's nothing you can do. or invest in better equipment to increase margins going forward. I'm not saying that share buybacks are bad. I'm just saying that if it's true what we were talking about before, that the big money is once bitten, twice shy, and they want to see quality execution, then I think that's what we need to focus on. We know costs have gone up, but if they can deliver margin expansion anyway, like instead of just letting costs balloon and hoping that the higher metals prices will cure all ails and kiss the babies and make everybody fine, that's not a great business plan. Because if you're nervous about the prices and the costs have caught up, nobody's going to want to buy that. But if the prices have gone up and they've had discipline on the costs, people will say, wow, what a great business. And again, there's a moat there. So I would put that personally first and foremost. I want to see discipline on the ground. I want to see improved operations, margin expansion. And then if you're doing that and you want to give investors a little extra with increased dividends or a buyback or something, okay. But that's not the first use of funds that I would look for.
Markets reward patience more often than urgency. Assets that move straight up rarely stay there. Experienced investors understand that taking partial profits isn't a betrayal of conviction. It's risk management. Physical metals and mining stocks serve different purposes. Metals preserve purchasing power. Stocks are vehicles for growth and speculation. The strongest opportunities emerge when quality companies demonstrate execution over multiple quarters, not during moments of peak excitement. Operational excellence, margin expansion, and prudent capital allocation matter more than hype. Volatility can be a tool rather than a threat, offering better entry points over time. In the end, successful investing isn't just about making money, it's about keeping it.